Well, welcome everybody. Welcome to another edition of Capital Conversations. I'm Colin Day, financial advisor, certified financial planner, and with me again is
John Biedenstein.
Whoa, look at that. John Biedenstein. He's a veteran of this podcast and video. Thanks so much for joining us again, John.
Thanks, Colin.
So today, we're gonna change gears a little bit. For the past couple of weeks, we've taken it easy, maybe phoned it in a little bit, talking to different members of the team, just wanting you all that are watching or listening to this understand, hey, there's a whole team behind whoever's sitting in these chairs on maybe a bi-weekly basis, that there's a whole team that can help you when you have questions or concerns, and whether that's on your 401k plan or your individual wealth management needs. But we want to get back to what this is really all about, which is talking about certain financial topics. And so, one of the things that we were afforded the ability to do last week was talk in front of a group of business owners about 401k plans, maybe being a little bit more creative about 401k plans. And for the past 2 years, we've done a survey of our participants in our 401ks, just asking the basic questions of, how do you feel? How are things working in your 401k plan? What do you need from us? What do you need from an education perspective? And with that survey, we created a one sheet which tracks the 6 biggest ideas that we took from that, that we feel is important for business owners or for people that work in HR or payroll to know about their retirement plan. And so on that, and if you're interested, you can always email info@correctcap.com. We'll be happy to send you a copy of it. But with this edition, we're going to talk about the number one thing today, and maybe in future iterations. I'll invite John back again and we'll talk about more of them. But the big one that we came across was just the fact that participants in our plans need help, right? I mean, that's why we're advisors in the first place, is to help people. And we are finally seeing an uptick in the number of people that are looking for financial advising for that kind of help. So we had a question that was, within the next 12 months, do you plan to engage with a financial advisor for assistance? And it's on a scale of 1 to 5. It's a very rudimentary survey that we do here. 1 means basically no, I don't plan on doing anything at all, and 5 is absolutely I will. The most common answer on the survey was 5 out of 5, absolutely. And that answer of absolutely was up 8% from 2021. So John, why are people suddenly answering absolutely, and that number is even higher than maybe what we saw last year's survey?
Well, I think number one, it's the market conditions we're seeing. With the high inflation we're seeing, and the market volatility. People concerned to see their retirement balances, their life savings in some cases, going down when they're expected. If you're retiring in 5, 10, 15 years, if you're retiring in 5 years, it's a bigger concern versus 15 or so out.
Sure.
So that's a big concern. The other thing is you've got a large number of baby boomers that are soon to be retiring, and maybe they want to continue working. They start seeing these numbers and, take that retirement balance, the way the balances sit today, and look at lifetime income numbers and look at their Social Security benefits, and they start saying, hey, will I have enough? Do I need to, what's my game plan? So part of that game plan is talking to your financial advisor and getting a plan in place and going through that and seeing, is there things that you need to do? Do you need to make a change? Do you need to move to a safe haven? Or do you want to continue to ride this a little bit, because we think over time, history has shown that over time, these inflationary trends we're seeing go away, and market performance returns to what we've seen over the last 2 or 3 years, not what we've seen in the last 12 months.
Right, yeah, and I think that's very true, that when people are this close to retirement and the dollar amounts in their retirement account are suddenly becoming a lot more real. Something else that's coming out on statements is lifetime income amounts. I think it was a couple of years ago where record keepers on retirement plans have to have some kind of illustration of what amount might you be able to withdraw at a particular retirement age. And seeing that number and comparing them quarter by quarter, when one quarter you were up and the next one you were down, suddenly that money, which has been phantom dollars, paper losses, let's say, are suddenly becoming real. So those types of folks are suddenly realizing the amount that I thought I needed to be able to survive on retirement is not going to be fulfilled between my Social Security, pension if available, and my 401k. And suddenly that fear becomes the reason why they want to engage with an advisor.
Right. And also, even people that are retired and maybe you're withdrawing from your 401k or IRA. But you also, we always meet with people. We want to make sure people have kind of 3 buckets of assets and they pull out of those 3 buckets of assets as needed. Well, it might be a good time that you're, using more of those outside of retirement plan assets that might be more shorter term in nature and less volatile in regards to the up and downs of the market. Use those resources or use those funds now and kind of delay taking the retirement distribution for a period of time.
Right.
So that's where the advisor can help you to say, let's look ahead here. Let's see where what your income needs are, what your expenses needs are, I should say. And, if we need to make adjustments, we can help you there.
Yeah, and that's very true, especially with those folks that are looking at the 401k as their massive asset, so to speak, as to where they're going to be able to take care of their variable expenses. Because even if they're on Social Security or they've got a pension payment, well, those are going to come at the same time every single month for the rest of your life. There's very little variability. Maybe there's cost of living adjustments. But with the 401k plan, it's all about withdrawing at the right times, making sure that you have a plan in place and you're being intentional as to how you're using those funds. So having cash in retirement is generally king, except for times when interest rates are what they are and inflation is what it is. Because when there's nowhere to hide in a year where stocks are going to be down, bonds are going to be down, well, the last bastion that you might want to put your funds into might be something in cash. But again, unless you're getting some kind of guaranteed rate that is incredibly high, like 1980s high, you're going to be losing money. Because inflation is going to be annualized somewhere around, let's say 6% this year. You're not going to find a vehicle that's going to be able to do that. So it is being productive with your funds to say, maybe I'm taking my cash and doing something else with this. I don't know exactly then how my 401k plan works, because I can know what I can do over here in my cash, because this is money that I have available to me. This is tangible. But the kind of amorphous, the kind of in the cloud kind of money that's out there, it's just a little bit harder to know exactly what to do with that.
Yeah. Colin, you mentioned an individual that might have a stock position, whether it's a ESOP, company-owned stock, something like that. What's your thoughts on things that they should be thinking about right now?
Yeah, this might be a good time to try to reevaluate your position, especially if it's a heavy position in company stock. So many of our clients do have company stock either in their retirement plan or in outside resources. And while they want to be, providing for their employer in a way in saying that, hey, I believe in our company and where we're heading, and so thus I'm going to invest in it, having a highly concentrated position is one where, might make you feel a little bit uneasy. You might have stock options that are vesting and you're wondering, do I maintain these? Do I sell these? If I sell these, what are the tax implications? Especially in a year where, especially like on the growth side, like tech sector side, those particular clients might be more concerned about performance and where things are going in the future. Now is a great time to engage with somebody to give some kind of professional opinion, or at least an outside opinion, to maybe what you're hearing, internally within your firm. So this is all to say that, again, with our survey results, this is exactly why we do this, because to better serve our clients in our 401k plans, we have to have this kind of information. So this information then allows us to go to plan representatives and say, hey, we got to be out there. We got to have conversations. If you're working with an advisor on your retirement plan, making sure that your advisor is one that's providing things like fiduciary advice, making sure that they are willing to do education that is specific to the employee base. If your employees are 20 and 30-year-olds, they probably don't want to hear about Social Security, John. I can't.
But if you're like me,
different story. But we need to make sure that we're addressing their concerns. And sometimes it is, hey, we're new. I've never had stock options before. What am I supposed to do with this? It could be as simple as, on the other side of the spectrum, from the career spectrum, it could be, hey, I am a lot closer to retirement. How do I convert these funds into something that is going to last me for the next 30 years in retirement? Making sure that people feel very comfortable in their decisions, whatever they might be. So John, parting words, what are your thoughts in regards to, how necessary, advice will be going forward in 2023? Where do you think about that?
Well, I think we're going to see a continued need to assist participants, assist individuals in planning. So, having a resource for you, whether you're a plan participant, if you're a plan participant, we're a free resource. If you're a client, you're paying for that assistance and help that we provide to you.
Mm-hmm.
So take advantage of it. I don't think, I wish I could say it was, but I think the volatility is going to continue on for a period of time. And so there might be things that you want to kind of plan through.
Sure.
So.
Great. And again, if you're interested in learning a little bit more about our survey results, info@correctcap.com is the email address. Be happy to send you a copy. So, for John Biedenstein, I'm Colin Day. Thanks so much for joining us.
Thank you.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Correct Capital Wealth Management is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Correct Capital Wealth Management and its representatives are properly licensed or exempt from licensure. No advice may be rendered by Correct Capital Wealth Management unless a client service agreement is in place.